Hey Brian, how are you?
Good, good. Thanks for having me on.
Thanks for taking the time. So this is a new video regarding the series we do with our users, where they tell us about themselves, how they use the process into their own process, how they use the tool into their own process, and maybe share their experience, etc. So could you please introduce yourself to the audience?
Sure. Yeah, my name is Bryan Ross, originally from California once upon a time, and then I moved to Texas for college a few years ago, kind of young. Went to school at the University of Texas, studied engineering there. Out of college, I worked for an oil and gas company for 4 years, worked offshore on deep water rigs for them, and then I was on the business development team after that. The whole time during there, I was really interested in markets. Didn't really develop a good trading process for probably the first half of that. I was jumping around Motley Fool and Fox Business and CNBC and all the lots and making all the mistakes. And but it was a good exercise to go through. And then back in March, I left that company. So now I'm trading full time. I'm in the process of launching a hedge fund, and I landed on your tool right as it launched. When I went beforehand for ranging and identifying trends and whatnot, I was using a combination of my own tools. It was Bollinger Bands at different durations with Dotchkin channels and all of that. And it was a bit of a mess. It got me through, it was a bit of a manual effort. I had to write down all the ranges and plug it into my system, as well as it wasn't that accurate. When I identified with like Bollinger Bands, for example, compared to MFR's ranges, is when volatility spikes or volatility is flat, like at the two ends, it doesn't work very well. Either the range compresses really tight, or if you're falling off, you've seen a Bollinger Band, it doesn't even tell you like really how far you can go. So lost some money using those, but landed on your tool, and it's been going really well. So I mean, if you want, I can go through a few ways that I use it.
Yeah, sure. I mean, so for example, the reason why I wanted to talk to you is because I saw your process popping out on the Twitter feed, which is very, very detailed. You study the implied volatility, discount and premium, also the volume in comparison to maybe the previous day, the previous week, the previous month, and you also combine with the range and the trend that we provide. So can you elaborate how you come up with this tool, and of course how you plug our system into your system?
Yeah. So one key point and a real big basis of the tool is that ranges aren't the only thing, right, in the whole process. So you're gonna have the range, which, to be honest, you can't trade anything without a range. You really need a trade range on any ticker, whether you're trading some volatile small cap or you're trading some low beta utility stock. A range, it's critical, so you can understand what your upside is, what your downside is, and then it allows you to size accordingly. So trade ranges are an integral part of like the signal strength that I pump out in my tool, and then as well as whether it's bullish trend, bearish trend, neutral trend, and then if it's making those higher highs and higher lows. So those three things are just three factors within my model. And then alongside those three things, I have then volume. Is volume accelerating on up moves? Is it accelerating on down moves? Is it weak on up moves, so decelerating, or is it weak on down moves? Obviously, weak on down moves would be bullish. If it's accelerating on up moves, that's a good thing and something you want to stay in. And then the second thing, like you mentioned, is the volatility. So I look at realized volatility as well as implied volatility. So we're looking to see if implied volatility is higher than realized volatility. So the implied volatility of the closest monthly contract. I look at both the call and the put implied volatility. Actually, it actually allows me to identify if people are bidding something up with calls. So I almost combine it with my volume. If implied volatility of call options is high, then people are buying a bunch of calls alongside the volume. And it's almost like a double volume, the way I look at it. But I look at those, and then also realized volatility helps me a lot with my sizing. So the way I beta adjust sizing is actually based on R vol. So if we have a 20-day realized volatility of something that is really high compared to the market, that might be, I think it was about 8% today, 20-day realized vol, then I'm going to be smaller in something that has a 25% R vol. So that's the way I'm looking at it. One of the big things with sizing and the range is, obviously there's one thing: if something is towards the bottom of the fractal range, then it's going to have a stronger signal. It's pretty straightforward, because then you have more upside than downside. That's one contributing factor to having a stronger signal. Another thing I use it for is my sizing. So I typically won't get to max sizing in something unless it's at the bottom of the fractal range. Okay. Now, there's got to have the other pieces of the model working in it for me to get to a really strong signal, but having it being at the bottom of the fractal range, that adjusts my sizing too. And then I have the model to where if you move up in the range, then it's telling me to reduce my size. So it almost gives me an automatic trimming. Like, hey, if we're middle range, trim some, 3/4 up, trim some, top of the range, trim some. And that's the range. Yeah.
It looks very sophisticated. I mean, it's exactly the way to do it. And yeah, I mean, please continue. I mean,
yeah, sure. So that's the main thing. Those all contribute to the signal. One big thing that influenced the creation of the signal strength was I was trimming things too quickly. So my problem is less about worrying about buying things when they're down and more about how much I should sell when I was up. So I was trying to find methods to help me ride winners for longer. I still have this problem. So example, this week we're filming this on the 26th. Tech just ripped for the entire front end of this week. I sold too much early in the week. And so the signal I have, when I have a strong volume, and let's say an IVOL premium remains, but we might be middle to towards the 3/4 mark of the fractal range, hopefully in a good scenario, the signal will still be in the 7s or maybe in the 6s for me. So it'll tell me, hey, like, don't trim it.
Yeah.
Continue riding this one. And then when I see volume start to slow at the top, in conjunction with if we're towards the top of the fractal range, then I'll start trimming some off the top. And it works the other direction too. So, a few examples: oil back in July, as well as energy stocks, got completely out of them. Copper before it dumped, same business. And, those obviously all before they dumped, they got to the bottom of the range, of course, right? Because, one big thing is everything crashes from the bottom of the range, not the top of the range. So they all got to the bottom of the range, but most of the time they got there on accelerating volume. So when I see that, I don't start loading up completely at the bottom of the range. I wait. You wait and watch. And what then starts to happen with your signal is you hit the bottom of the range on accelerating volume. Maybe the next day that goes from higher highs on the bullish side to neutral and then to bearish. And obviously I see that in the system, but I also see it in my signal.
Yeah, so you have a confirmation. You have a confirmation that you're picking up on something that is maybe beginning to trend to the downside, despite the bullish trend, maybe.
Yeah, exactly. So if the signal doesn't weaken too much, I'll hold on to it. So for example, Nike right now is a good example. The thing won't bounce for me. It's a shame. Today it got sold on accelerated volume. It's towards the bottom of its range. It's got like a 0.7 on the signal. So I'm not buying any more here. Okay. I'm about a half size. I don't need to unload. Maybe it sells more. It starts showing bearish lower highs, lower lows. And then, when it's weak enough, like in the 0.5s, I'll just curve it. The thing that I've identified, I might miss out on a bounce off of an oversold low, but typically if you're curbing it early enough, you're selling it about where it would bounce to. So you're holding cash. It's not being invested, but you're reducing the risk of just significant, like a trend breakdown, which can be devastating for capital. For example, back in March, I remember Blade, back when it was a SPAC. That thing, I rode that the entire way down. That was before Fractal Range. Yeah, that was a tough one.
Yeah, it's this is something we are talking about before launching the recording. Is usually people they wait too late before decreasing their position. So you mentioned a problem that maybe sometimes we take profit too early. I have this problem as well, and unfortunately, I don't have all the things that you build regarding the volume and the volatility, implied vol, realized vol. Maybe I should do something about it, by the way. But yeah, in the other way around, it's like sometimes the users, they will say, okay, now this thing just moved to neutral trend. Should I trim it? But the problem is it's already too late. I mean, you should have trimmed it earlier. So to fit into the way you are using the tool in combination to your own, the way I do is if I am in a bullish trend and the ratio is maybe low, you know, and I can begin to see the top of the range beginning to not do high. For me, this is the most important signal. It's saying the momentum is gone. I rode it all the way, and currently it's just saying, yeah, I just don't want to go higher. And the problem is you don't know how the stock or the ETF or the asset in general will behave after this.
Yeah.
Will it like correct, dump, maybe simply do a lower low within the bullish trend, or maybe even like break trend, you know, totally? I mean, you never know this. So you don't want to react afterwards. You want to react when you see the first warning. So
yeah, a few things with that. One, you know, I found that if you're in something and you know you should have sold it a while ago, I typically will just dump it right then and there, because you don't know if it's going to improve, and it's better spent for your time and money to go look elsewhere. And there's plenty of opportunities. You know, one of the big things I use the tool is I have a ton of tickers, and I subscribe to the premium product. So I got the 300 tickers plus the 60. Yeah. So I load it up with there. So, you know, part of my weekend process, and I send that newsletter out on the weekends, is I go through, you know, within my allocator of the performance report I send to people. I also have a sheet that I can map out every ticker in terms of their sector, and then who's leading in terms of 3 month, 1 month, and 1 week performance. So I do that manually on the weekend. I say, okay, who's the 3 month leaders? Who's 1 month leaders? And if I don't have those in the fractal range, I then go and add them that weekend. If I need to, I do a ticker reset. I take out some ones that aren't so great. I put in new ones, and then I put those in there. So yeah, if I see something also that's in there that's showing a weak signal, it's not something I might buy this week, get that one out, put a new one in. So I'm constantly filtering through what I'm tracking in your system to then help influence, to have then more options of strong signals when I get the opportunity. So if I have one where I'm like, this thing's terrible, let me get that out of here. Let me sub it in for this one, which is a similar type of position that I want to have in the book, yeah, but it's got a stronger signal. So I use it a lot that way. And then another thing that I do is I don't only put tickers that I want to trade in Fractal Range. I've also started loading it up a lot with currencies, with bond ETFs like TLT, currency side, UUP, a lot of style factor ETFs like high beta, low beta, quality, XLG, so the really big mega cap one. And I'm mapping those as well. You know, I might not buy the style factor ETFs, but those then allow you, in conjunction with, you know, the major indices like SPY, IWMQs, you can then get an early signal of what's the larger like indice doing, right? And that's going to influence then some of your tickers at the lower level. So, you know, for example, we ran into this yesterday, as well as at the close to more in the morning today, is you'll get tickers that are in the middle of their range. And on my signal, maybe they're in the middle of the range and they don't have confirming signals on volume and volatility. So I'm in no man's land, I call it. I get like a 0.5 on the signal or a 0.6 on the signal. At that point, when I see that, I don't really care what the upside or the downside is. I'm not really looking at it that way. I'm looking at it as in, this ticker doesn't know what direction it's going. So
Yes.
that's the situation where I'm like, okay, what is the major indices doing? What's S&P doing, NASDAQ, small caps, and applicable style factors? And then that'll allow me to make a decision on some of those tickers that are in no man's land. So I might cut something today that I wouldn't cut tomorrow based on what the larger indices are doing. So it's important then, and even VXX, I put that one in there recently to get maybe an understanding of what volatility is doing, and use that not really necessarily to trade VXX, but to maybe get a read on volatility. So for example, today VXX closed on big volume, and I think it was towards the middle of the range. So I was getting like a 0.6 signal, which might mean that tomorrow we open red because volatility might spike at the open.
Yes.
So there's a lot of versatility with the tool that I've been using for sure.
Yeah, the way I see the tool, and we've covered in part this with Sherry in the last interview, was I see it like the ghost in the machine. You know, it's like you don't really know what's going on, but you can pick up on some signal, and this signal is, I would guess it's the big guys. You know, the big guys, what they are doing.
Yeah.
You know, the guys who are driving the market. Where will they drive the market next? You know. And this will give you a huge advantage. For example, like you mentioned, maybe sometimes the ticker, you don't know, it's in the middle of the range, and you look sure, the trend looks nice, it's doing maybe a higher high, but you are picking up some signal regarding the Qs or the peaks, or maybe the Russell, saying like, okay, something is going on, maybe there is a correction coming. So you can use this also to maybe to front run change in this particular ticker you are watching.
Yeah, she talked a lot about the ETF flows, and in a lot of ways that's what the system is, right? Because I mean, it's based on momentum, it's based on price movement. So you know, where is the price going? That's what I'm doing on the weekend work, and then you want to confirm that with your system to where you can get something that's moved a lot recently, maybe it's pulled back very recently, and then you can size it at that time. Another thing I do is in the mornings. So obviously to get all of my signals in Excel in that performance report I send out, I do the export functionality. So I fill up all my watch lists, the portfolio, and first thing I do in the morning is I export all those to get all the refreshed ranges, put them right into the Excel, refresh, and see all the new signals. So that's the first thing I do in the morning. Then the second thing I do after reviewing, you know, what moved yesterday, is I start tracking all of like key signals that I want. So for example, you know, I've got in the portfolio tab on MFR, all of everything I want to track here in the morning. And I adjust it week to week. Maybe I'll look at a specific style factor this week or a specific country that week, but I usually keep it high level. So less about individual tickers on here and more about, like I've got all the US domestic ETFs. I've got, you know, South Korea. I've got some key commodities like sugarcane, coffee, natural gas. I track all of those ranges daily in here, and I'm looking at the big things on longs. I want to see them pointing to higher cycle highs or all-time highs. And then obviously I want to see higher lows. And then on shorts or things that maybe I want to be long, but I'm not going to buy yet, you know, I'm going to see lower cycle lows and lower highs. And, you know, that's a really important thing because, you know, I know in the system, it's got 30-day higher highs. So you're looking just at a 30-day range, but that higher high might not be a cycle high. And I think that's really important. So for example, silver, I want to say maybe it was a month ago, it started showing higher highs in the system, but it still wasn't at where it was earlier in the cycle. I think maybe January it got really high. So I'll look back to see, okay, is this a cycle high or an all-time high, or is this just more of a local higher low or higher high? And I use the chart feature actually a lot specifically for that. Other than that chart, I actually don't trade with charts at all. I just have my signal up, and then I look at, you know, S&P index chart and whatnot. But like whenever I buy something, I don't look at the chart. It just confuses me too much. But for years, when I'm looking at the ranges in the morning, if I see something that's, you know, maybe it's a lower high compared to the prior day, and I'm like, okay, it's a lower high compared to the prior day. I open it up. It's still a cycle high. So then what I do is I say, okay, it's still, probably can't see that, but I basically say like, it's a cycle high. It's a cycle high, but the lower end is lower than yesterday. So what I start to see in my book is maybe 2 or 3 days in a row where it's still a cycle high, but the lower range is going lower and lower. And that typically gives me a sign like, hey, this thing might break 30-day higher highs soon, and something I might size in. So this one, obviously these things I write down on this piece of paper don't feed into the Excel sheet, but it's part of the morning look and looking like, okay, you know, what moved a lot yesterday? Because a lot of times this is more granular. Like I'll write question marks. Hey, is this a high or low? And then tomorrow might not confirm it. So it's more of a daily check alongside the longer, you know, 30-day look that the signal gives on your tool.
Yeah, this was it was arbitrary. We chose this, but yeah, you are definitely right. Actually, looking at your note, I'm thinking, yeah, we will make the tool more and more powerful, so you guys don't have to write down everything. I mean, there's a lot of work in this.
Oh yeah, I wake up early.
Yeah, we will need to talk more. Like I mentioned before we do the interview, we will invest a lot of resource in making the website more smooth. And once we are done doing like the mobile, the tool being used on mobile, redo the organization, visual organization. We're gonna invest some time in this kind of thing. Maybe allow the user to outsource all this work, so you don't have to do this every time. You just print it, and then you have your stabilo, and you say, okay, did, and the work is already done. So I think we will have to talk about this maybe I would say in 3 months to see what you would want for the tool to do for you.
Yeah, and that's a really important point of the tool, and it's big for me is this is like the way I look at it, and I am outsourcing a lot of the computing effort to you. I mean, I was a retail investor. Now I'm switching to launching my own fund and trying to make that happen. I don't have the resources to be able to go hire a quant. I don't have the skills myself to code in Python or R, and I wouldn't do it as well as y'all anyway. So the way I look at this, and I'm looking at it, you guys are a service provider for me. I'm basically outsourcing the computing power needed, the expertise to create these ranges better than I could. And the awesome thing is that you provide the versatility to be able to easily export it right into then my own process, and then it implements itself that way. So you're integrating really well with young, newer retail investors, as well as boutique RIAs and funds, to really be able to have them deliver a computing machine that they wouldn't have been able to before, which is great. And I love it. It's making truly like without your tool, I don't know if I'd be able to start the fund I'm doing right now, to be honest.
Thanks, man.
Yeah.
It's something I've seen, and that's why also I invite. So I mean, you've had Matt and Sherry, and now you can't use the tool straightforwardly. First, you need to understand it, and the best thing would be that you already have a process, and this thing will maybe challenge your process, or maybe make it grow, because you can just take like, okay, it's a bullish trend. I like the stock because some guy say he likes it. It's at the low of the range. I'm gonna buy. It should be more, if you want to make this your job. I mean, of course, if you are like you take 3 positions a week, it doesn't matter. You just buy bullish trend with high ratio and you let it sleep, and good chances it's gonna work. But if you actively trade, you should have a process. I mean, Myfractalrange will not replace the fact that you need to monitor the macro environment. You need to monitor all this kind of flow that you have between maybe the tech or small caps or anything like this. This is the work you need to do. So of course we can try to outsource it. I mean, we're gonna get better with the month moving forward, but you still need to use your head. Still need to use your tool. I mean,
big time.
Yeah,
big time. Yeah, one of the big things, like, I mean, your tool, what it does is allows a normal person to have their own signal to be able to then confirm with what they're hearing and with their head on the macro side. I mean, like, you know, I subscribe to a variety of services. One of them is Macro Voices. I'm sure it's a free podcast. Everyone's heard of it. That was one of the first things that I ever latched onto. And I remember when I first started listening to it, I had no idea what they're talking about. I was like, I'm going to keep listening here. And then now I'll hear something, I'm like, that doesn't make any sense. You're wrong. Right? It's back and forth. But like, you know, what I found with that type of research, as well as, you know, if you watch, you know, mainstream television, a lot of it is very pie in the sky. When you listen to some like economists, their head is thinking so long term that it doesn't provide you any actionable insights to be able to
there's no
execute on your
timing.
strategy.
They don't have timing. They just say someday it's gonna be like that.
Yeah. So with a tool like this, you can take that information, understanding of the market, understanding of the macro regime you're in right now, and then execute a strategy today, moving in that direction. And the great thing to see is when you have a good sense of the macro and then you see your signals start to line up with it, then you're like, it gives you more conviction than on executing. And it's great.
It helps you for the timing. So the perfect example was crypto. I mean, if you listen to, for example, Real Vision, I mean, they push Bitcoin for a good reason. I mean, we all understand why. I'm not going to go into this. I like Bitcoin. I think it's good. But the problem is you don't buy this, randomly. But the problem is if you listen to all the crypto mania, etc., you would think like, yeah, it's at 50K, it's going to go to 100, and let's buy it and buy it every day. But if you listen to the signal, you could see, okay, strangely, crypto now is doing like lower low, and on the it's still bullish, but doing lower low, and maybe I should decrease my position or even get out because something is fishy. Then it went to bearish, and it lasted for, I don't know, maybe 3 months or something.
Yeah, something like that. I was shorting it. It was great with the tool. It was awesome.
So yeah, exactly. You could have shorted what's the name of this company, Michael?
MSTR.
MSTR.
Maestro.
I mean, this was a great short. I mean, even all the miners, etc. You could see the signal was saying, okay, it's not the time. But if you kept watching some shows about Bitcoin, they would say, oh, it's the deep. And you could see, for example, on Twitter, at some point, it became silent. You know, they were not talking about buying the dip. Crickets, you know, nothing. And maybe like a month ago or something like this, it was end of July. End of July, we begin to see some changes. Like, okay, the bottom of the range is not going down anymore. Then it was like it's doing high within the bearish trend. Then it went to neutral. Then it went to bullish, and then all the guys on Twitter, they came back talking about crypto, like, oh my god, it's coming back. So, but the tool was helping you to get the right timing. Even if you are a very big advocate of crypto, you could have used the tool to get the right timing, get the right sizing, especially on the phase transition from bearish, high, neutral, and bullish, etc. And I mean, I think crypto went from 30 to like 40 something. So it's a big move. But you can do this for anything. Some people, maybe they are talking about all the reopening trades after COVID. The problem is if you are looking at the data for example, the COVID hospitalization, sure, it gives you a good macro view of, okay, the cases are dropping, so I guess the hotel and for example, the airlines, they should go up, etc. But the problem is it doesn't include, for example, the policy response or any other thing that could impact, you know. So what you do is you just plug into MFR all these companies, and you can see for yourself if it's still bearish, doing low. I mean, there's no point in buying. I bought some, but for another reason, because I was trying to have fun. But why buy it? Just wait for the signal to change. As soon as you see it doing higher high within the bearish trend, it may be time to come back. And then when it goes to neutral, still doing higher high, then maybe you can increase. And when it goes to bullish, then you can go, because it means, okay, now all the funds they will go into this. The machine will force them to go into this, and you will benefit from the signal pushing the price higher, and that's how you make money.
Yeah, the market will always give you a chance to get in. They'll always give you a shot. And a lot of the times, you know, if you look at something like some of the gaming stocks or the airline stocks that you want to get into, they're bright red for the last 2 months. They're just bright red. You don't want to be in there. You're getting crushed. And yeah, you're probably going to miss a 10% pop off the bottom.
Yes.
But when you see that 10% pop, and maybe you'll see it during your weekend work, you're like, oh, this moved 10% this week, or you see it in real time, you don't buy it then, you're like, okay, it's probably going to pull back a little bit. Does it make a higher low? Does it start shifting a neutral trend in the thing? Then you get in. So you have to constantly be watching that phase transition there.
Exactly. And one question I haven't asked the two other guys is, so do you think Myfractalrange is working? I mean, I understand it's useful for you, but have you witnessed something that was like, what the fuck, it's not working? Or, I mean, there's something wrong with the tool or this kind of thing?
Yeah, it's working. I'm making money. Trades are working out. You know, a lot of ways, I think it's shorter term than maybe some other signals out there, which I like. I like seeing the consistent phase transition, so I can say, okay, this one's weakening now, and then that can make significant impact on my signal, rather than it remaining, you know, bullish or bearish for a long time, and then you're taking a big drawdown. So I like how it's constantly changing. You know, you'll run into some scenarios where something might have 0.5% downside in a day, and it might go through the bottom of the range. You can do a refresh range and get a new one. It might go through the next day. So, you know, I don't know if there's some tweaking around that. I'm not a pro at fractal ranges, but in general, the main thing for me is on a day-to-day basis, it gives me a sense of if something is more sold or more bought. Is there more upside or more downside? That affects my sizing, and it also affects then my signal strength. So that's the most important thing for me. As long as we're nailing where along the 50% line, then where along the 25% line we are, I think that's really where we need to make sure the tool's working.
Okay.
Yeah.
So yeah, I just had to ask, you know. I mean,
well, I'm still subscribing. I got more tickers, so
I saw you. Yeah, we have like maybe 10 people. They have like the biggest package you can get, and all of them, they are like professional. They're like 300. You have 350 because you have the 300 plus 50 from premium.
Yeah.
Plus the real time. Yeah. What would you say to, for example, the beginner? Maybe they are beginning with the basic account, or maybe even the premium account. What do they need to watch out? Maybe how can they use the tool to make money? What would you tell them?
Easiest way to make money would be to only buy bullish trends that are making higher highs. That's the number one thing. So buy something that's bullish. That'd probably be the easiest way. And then wait for it to get towards the bottom of the range to buy more. And then obviously, you know, everyone knows this, that is probably using the tool to incrementally buy. You know, you might see it at the bottom of the range, but you don't want to get to your max 4%, 3% position size right then and there, right? You buy a little bit at a time, and then everyone knows the process. You incrementally get in. That allows you then to have maybe a couple of down days to then get to your size. So I mean, for example, for me, this past week against August 26th, I was loading up on utilities big time, loading up on utilities. You know, they technically got to around the low end of the range on Tuesday. And I had like a 0.8 on my signal, but they've kept, they've been struggling a little bit. They've been down a little bit today. They'll rally intraday and they'll be down a little more. So the big thing is maybe, you know, for someone that might not be able to trade all day long, I'm lucky to where I'm doing this full time. So I've got the screen up, you know, all day long, and I can see when the signal pops up and I can load in more then. Maybe set some limit orders towards the bottom of the range day in, day out. So if you wake up in the morning, you know, you want to buy utilities this week, you see that the range is down at $60, you know, put a limit order at $60 for whatever your sizing is. Come check back at lunch, see if it hit. If it hit again, maybe if it's up that day, you check where the range is. Oh, I might want to sell some, and you can do it that way. The biggest thing I would say, especially with trading being free, is a lot of these things will reverse intraday. You know, so it's really important to be there in the morning, see if you can catch red, and then after lunch you might have green, and then you can sell some. And that's really where you generate big alpha. Like for me, where I'm trying to beat the S&P, the NASDAQ, and CRB. Those are my three benchmarks. In order to do that, I need to be able to be there for red in the morning to see if we get green in the afternoon, because we might get green in the afternoon, and then the next day I don't know if we're going to be red or green. So the intraday moves and using the range that way, I think, is then probably a step above beginner. For a beginner, just buy bullish, and if you like shorting, go bearish.
Yes, that's the way. Let me think. Yeah,
I'd say too, you know, short selling's been awesome on it. You know, for short selling, it's a little different of a beast, obviously, than going long. Long, I keep a lot more longs on the board, and you know, I won't sell them so quickly. Shorts, I keep a tight leash on these shorts. For my signals, I'll usually go between 0.2 to mid 0.3s, and at mid 0.3s, I'll just kick a short off the board. And the range helps a lot with that, because then you can get a really good sense of like, okay, it's bounced up here on weak volume, let me short it here. And especially on these small caps, which has been great, then you can sell some at the bottom of the range. Short selling has been incredible on it.
Because that's very good to hear. Yeah, like I said, I don't short outside the deflation.
You gotta join it, man. There's some good stocks out there to short right now. Some of these small caps, I could get squeezed, and that's the tool. I've taken your tool, and I've also built out a good indicator for myself of if I'm going to get squeezed, because I've gotten squeezed before. It's not fun. Probably gonna get squeezed again. It's a normal thing. Biggest thing is keep your position size small. But then when you use the tool, is if you have something that's been bearish and it's been getting crushed, you're looking at it's down 20-30% over the last 3 months, and you start to see it maybe go bearish to neutral, and then maybe you combine that with looking at the volume, and you're saying volume is up a lot on these big days, implied volatility might be coming up, people are bidding up, you know, put options, get out. You know, shorts, you know, you don't need to hold a short on the board like you do a long. You know, you can just get it out of there. So I'd be really, you know, I just switch them through. There's a lot of short selling opportunities out there, and find the ones that are at the top of the fractal range, short those, and when they get to the bottom, kick them off the board. That's the way I look at it.
Okay. Yeah, I'm not gonna do it, but maybe there are some people. Yeah, I'm just traumatized. I don't know if you know.
Did you
Yeah,
get squeezed in January?
yeah. In January 20, from actually it wasn't this. From I think it was October to January, I got squeezed by Tesla. 2020. So yeah, it was terrible. I made maybe half back during the COVID scare, but yeah, I got traumatized. It was the last time actually I decided to seriously do short selling. Now I'm just like, sometimes I'm gonna touch some short, but I'm like, every time I do 1%, like, okay, I'm out. You know, and if I see it's going against me, I'm like, cut it. You know, just
yeah,
I don't know. It's better like this. But if we go back to deflation, we are talking about that yeah, just before. If we go back to deflation, of course, there are some sectors that will truly underperform I mean, not to say crash, you know, when you have deflation. So of course, when we go back to deflation, yeah, I'm gonna jump on the wagon. It's just,
Sure.
especially right now, you don't know. Every day, some macro guy will say it's this, another one will say that. They all change every day. I mean, I need certitude. I understand we are in a randomness, but I need certitude. I'm
Yeah.
not gonna short and get squeezed because I trust somebody who changes mind too often, you know. So, so yeah. Regarding, I mean, do you have something to add regarding maybe the tool or something? I mean, anything in particular you want to share with the user or something?
I think we hit the big points. I mean, I use it for the exporting, and then I use it for daily ranges and looking at that. And I'm just expanding the use of the stuff, you know, the different tickers that I put in there, and find new ways to get signals off of different types of tickers.
Okay.
Yeah.
Regarding the improvements we should do. So of course we are very aware of the improvements people are asking. All of them, they are stored and we rank them by importance. So each of the improvement you guys have requested will be handled. It's just a question of priority. If one guy asks something, it's less important than if 10 guys are asking for it. But regarding your particular situation, would you have some improvement suggestion for us?
Yeah. Yeah. I'd say probably minor less improvements, more, I guess, new innovations, maybe new tools, tools within the tool. I think the main thing is, you know, really, where do you guys want this to turn into? And I think I heard in one of the videos, you want to really be a hub for risk management. And for me, you know, the way I look at it, and I mentioned this, you know, early on, I look at a hub for risk management, but also a hub for just market computing that I can't really do myself. That, you know, maybe I need additional equipment and additional specialty to be able to do that. One of the things Viados has been posting a lot is those correlations. I mean, that'd be awesome. You know, I mean, I find different things online to do the correlations, but if, you know, if you could give correlations for every ticker compared to maybe SPYs, gold, dollar, all of that, I mean, that'd be huge. I would spend, and the big thing also with that, I mean, you know me, I'm a big exporter. Every new data point you add, if it can be exported, great. That way, just, you know, and as you expand to, you know, more people and they use it more for a part of their own process, that's going to be really important so that you can then filter it into, you know, not just dashboards you want to make yourself, but also within my allocators, my own portfolio. I've got to feed in from an API from my broker, and I'm doing calculations on the portfolio itself for that. So if I could, you know, do a calculation of how correlated my portfolio is to a specific, you know, indice or to the dollar, you know, that helps me reduce risk. And, you know, just have to take one step further. I didn't mention this, but, you know, with my signal, I also do like, what's my weighted signal strength of my portfolio? How weighted is my portfolio to different types of assets? So like the more info, you know, you can give, the more people then can move it to their own things. Obviously, you know, you won't be able to get people's portfolios and do the calculations themselves. So like they would then have to kind of do it on their end. So the correlations was one thing. The second thing, and I assume that you don't want to give your trend lines, it's probably pretty proprietary, but what would be really helpful is if you gave us a heads up, maybe like a warning sign of if something was close to trend. Maybe if it was bearish and it's close to neutral, or if it's bullish and close to neutral, maybe within 2%, whatever way you want to do it, but like some kind of warning sign that I could export that says, hey, you know, this might switch to neutral today. Because one thing that happens is, I mean, obviously I've got a lot of tickers I'm looking at. Something might be down 3%. It might give me a strong signal, but that's because the signal isn't factoring in yet that it went to neutral. So if I can get something and I say, hey, this one was close to neutral, it just dumped 4% today, I could do a refresh range, or I know like, hey, that's probably switching to neutral tomorrow. Might reduce the need for a refresh range, but I think that'd be extremely valuable. Some kind of warning sign or something like that.
Okay. Got it. The correlation, actually, we already have this It's another tool, but we cut it from the release in March because it required a lot of manpower. So this one we will work on it. It will be pretty fast. Export everything, yeah, for sure, man.
Yeah, come on.
No problem. Weighted portfolio, yeah. The problem is we are thinking maybe to allow the user to put their sizing. So because the problem is, sure, you can put the weight of the portfolio, but let's say you have one share in one. I mean, let's say the value of the asset is $1. You have one share in one, and another one you have like 1,000. The weight is meaningless, if you cannot put the size it has in your portfolio. So,
yeah, no, I was saying for the way of portfolio, I would do that more on my end. If I exported
okay.
those correlations, I would just do that on my end. Yeah, from
Okay. And yeah, the trend, yeah, this is with Validatas. I mean, Validatas should decide. So it's not the first time people ask me. I mean, I regularly get a message like, "Hey, where is the trend? Is it close to going to bullish or maybe bearish?" Usually it's because they are overweight. I mean, let's be honest, they are like big in some neutral trend and it's like, it's not going to bullish, like gold, like I told you before we do the show, 4 times rejected the bullish trend. So I understand the need. I will ask Fidotas how to measure this. And maybe it's possible. I don't know. This one I have no idea because people ask, but I didn't build this particular signal. I have my own signal, but the signal from MFR was built by Vidota, so I need to ask him if it's possible to do something like this. So yeah,
because one thing I've seen is like, for example, utilities. I could wake up tomorrow and utilities might be showing a lower high or maybe a switch trend. I'm not sure, but for someone that's looking at it, that same bullish, it's getting to the low end of the range every day. They might keep loading up. This might be an extra little thing like, hey, you might not want to keep loading up because it's really pushing trend right here, right?
Yeah, I understand.
Or it's pushing trend, and as we know, like as you approach trend, if you bounce off it or you get rejected on it, like gold, that's a catalyst as well. So.
Yeah, it's a catalyst for a big down move.
Yeah. We'll see what happens with gold.
Yeah. Please don't use the knife on me like this. I'm also hurt by gold. I was telling you, why don't you get in? And you're like, no. And yeah, finally, then you have the big correction for 2 days. It lost like 5% or something. I was like, what the?
Yeah.
So I didn't add. I was in holidays, so I just I'm not looking. Just gonna wait. I'm sure it's gonna bounce. Then came back. It bounced. I sold off most of it at a profit. I'm like, okay. I mean, no problem.
That's the big thing on like that, on things that haven't moved yet. You got to be okay with missing some of it.
Yeah.
That's really the big thing,
Yeah, that's why you were mentioning, if you are a beginner, just stick to bullish trend and bullish trend doing a higher high. You don't necessarily need to wait for the bottom of the range. Just go with the flow, and when you see lower low, just decrease massively your position, wait for it to come back to maybe the low of the fractal range and starting to make a higher high again. I mean, make your life very simple. Don't hold losers. Don't hold a bearish trend. Don't try to catch the bottom if you are not doing this on purpose, because you want to have fun.
Yeah.
I mean, if you want to make money, just stick to bullish trend. Make your life easy.
Yeah, you're not going to get the really massive moves, but it's likely you'll print green every day. It's just momentum following, right? You're just trend following. You're sticking with things that have moved a lot. And as long as you can then track the macro and you're tracking the indices as well, it's a great strategy.
Yes. So to conclude, I want to thank you for taking the time. I want to encourage everybody to go to your Twitter handle, which is
it's Ross_capital_TX.
Okay, and to register also to your newsletter, which is awesome. Like I told you, I registered and I have one of the watch list. called Bryan Ross, which is awesome. So same. Anyway, I will, of course, I will tag you when I will post the video, but definitely, I mean, I think you've got one of the best process I've seen in FinTweet. I mean, how they call this, FinTweet, right?
Yeah, FinTweet.
I mean, really, it's I mean, it's really good, really, really good. And you are giving us actually ideas regarding the how to study the volume, the volatility, how to say, the premium and discount. I mean, it's pretty awesome. Really, you did a great job, and I'm very, very proud that you are using our tool into your model. I mean, really.
Yeah, I need it. So keep it up.
Yeah, thanks, man.
Yeah,
Okay.
thanks.
Bye.